All right, we are live here, Facebook and YouTube community. Thank you so much for jumping on today. This is Sam with Affluence Real Estate Group. Our mission is to help the everyday homeowner build a life by design and being able to do what they love with who they love and build their family legacy. So today we're going to talk about demystifying real estate investing. A lot of people think real estate investing has to be super complex, and it really doesn't have to be. I will link to our Build My Legacy Now site where we go through the biggest financial questions for every homeowner. So a lot of people think you have to be a $1 million real estate investor. Often it happens with equity in your home or someone that you do know. In this presentation, they talk about the three things. The three biggest financial questions is one, how do I get mortgage free faster? How do I minimize the lifestyle, so not without doubling payments? Especially in a volatile world right now with financials and payments going up, it's important to get financially free faster so you don't rely on the lender as much. The other one is, how do you pay for your kids' education? Thinking outside of the box, looking at typical RESP programs, what those look like, and how do we get something that's even better by using real estate as a vehicle. And the other one is retiring with at least $3 million equity. So it is described in that presentation. I think it's a really important presentation to go through. If you have questions, certainly let us know. What we also will do is we have a VIP Facebook group. It's a VIP homeowner corner. We are going to post a lot of content in there, a lot of free guides. We got a free buyer's guide, as well as all our vendors that we use. So whether you're looking to start adding an apartment unit, get an idea of how to take a bungalow and turn it into another apartment downstairs, or you just would like to just get started and understand how to use your equity, this is a great presentation as well, because the presentation actually goes through what does it look like in 5 to 10 years if you had that extra property. So we're going to get started here real quick. It's not going to be a long video. I'm just going to run through an example of what it looks like to invest in real estate and how do we actually analyze a home, a property. What are the elements of return? So when you think about return, what does that mean? Getting a rate of return of X. What does that all mean? Is it okay that your property or your home is cash flowing or is costing you money on a financial cash basis? So, we can definitely go through that. If you would like to book a call with us to go through your situation personally, what could be best for you, and get a copy of our buyer's guide. We also have a real estate investing ebook. Definitely click the link and we'll definitely make sure that you get that. All right, so we're just going to take you through here a analysis. So what we're doing is we're looking at a specific type of property and we're going to determine what is that property. We're going to just do an example. So we're going to take an example of a property listed for, let's say, 650,000. All right. It's going to populate to us. The loan to value is 80%. So 80% of the loan is the loan, and 20% is the mortgage, is the down payment. So you have to come up with 20% down payment and 80% is the loan to the value. So the bank is giving 80%. It's important to know that you're actually getting 100% on all the money. So you're getting a return. Let's say if it's a certain return, you're getting it on 100% of that money, the bank's money and your money. So it is a classic OPM, which is using other people's money. So in this case, we're going to look here. Let's say this person bought a house. They're going to rent it out basic. We're not going to do any renovations, anything. They're just going to put some, some simple renovations, just get the house ready, painting, etc. They had one of our contractors come in. They're going to buy a house and they're going to see how this all works. So they're going to buy an investment property here for 650. Down payment, land transfer tax. That is something that we can calculate. So we do have a land transfer tax calculator in our concierge. So we can grab that. For simplicity's sake, we do have a calculator in our concierge. For simplicity's sake, we are just going to put 8,000 for now. We can obviously calculate that exactly. There are calculators and we do have one as well on there. So you can see here we have inspection. Let's say that's inspection, financing costs, Let's say it costs about $7,000 to get the financing for the deal, and you had legal costs maybe around $1,500. 1 second. All right, let's say here as well that, this place is going to be generating $2,800 a month in rent. If you have questions too, we can send you rents of history rents. What we're finding right now is there are people that are affordability is pushing people to rent. So renting is going to be a good thing. If you'd like in another video, I can talk about AirDNA and Airbnb strategy. We have used that to generate a really good cash flow, almost $1,000 a month cash flow for one of our investment properties. So it definitely is a good alternative. One thing you need to know though with Airbnb is if you are going to refinance your property, you should not have it on Airbnb. They do not like it. Speak to our mortgage broker for more details. So having a long-term renter could be good. We also have a concierge for a property manager and also a paralegal. And the paralegal, Andrew Chubetta, had mentioned that, and again, this is not legal advice, but they had mentioned that it is important. Airbnb is under the Hotel Act, so it is different than the Residential Tenancies Act. So could be a lot easier with tenant management, etc. So something to think about based on your situation. So let's say you had 2,800. So annually you have gross income, which is annually your gross income and monthly your gross income. Okay. We're now for hydro, let's say the tenant, it pays the hydro and the water and the gas, which is pretty common. And let's say as well, property taxes, we're going to leave it at $280 a month. That's pretty common. You would just go to a property tax lookup tool, go to Kitchener, and you type that in. Property management, we do recommend. They're really great for vetting the tenants, making sure they get the right tenants, giving you a couple options. When you are going with property management, make sure you ask them, what is their credit score, what is their income. They can ask for those things ahead of time. And then you can usually pick between one or two. We do have a couple in our concierge. If you need anything, let us know. They are very invaluable, especially to be hands-off and to make sure that you can do the more important tasks of looking for opportunity. So this is a condo, home insurance, probably around $100 a month. Again, that's rough. Property management, we also leave repairs and maintenance for 4%. And then we have a water tank rental. Let's say that's around $50 a month. So we have $600. So right now you have operating expenses of $8,364 and you have income of $33,600. So your net operating income is $24,228. So based on that, that's the net operating income. Now, we hear things like cap rates and stuff. That's just the income over the value of the property ratio. That's what they do. Appraisers will look at that if it's a multi-unit building, like 3, 4, 5, 6 units and above. Usually, though, with this, we're just looking at a single-family home. So what does it look like when you buy a single-family home right now? What opportunities are there for you? Okay. So let's say the mortgage amount for today's rate, roughly again, is 5%. So that calculates automatically. So every month, it's actually putting you at a negative $995 a month. So you might think, well, definitely not going to make sense. I'm not going to go ahead and do it. I could totally appreciate where you're coming from there. Let's take a look at that a little bit more detail. So that's annually $12,000 that you would be costing you to keep this house. So let's take a look. Okay, this is actually calculated automatically. So your rate of return is 17%. So that just means that if I put $100,000 of my own money now, next year I'll have $117,000. Now think about where you're going to get 17%, or you're going to get $117,000 for the $100,000 you put in. Probably nowhere. This is going to be an asset that's paid by someone else. It's an asset that you control, so you can control how it essentially, the asset. So it's a huge, huge benefit there. So with that there, you have a return on investment of 17%. So you're looking at the rates of return. You have cash, the money you get back, so it's a negative there. You have the pay down. This is based on a 5% pay down. actually a pay down of regular pay down of mortgage, automatically calculated, and a 5% interest, 5% appreciation. Right now in KW, we're up about 6%. We anticipate more buyers coming back into the market, and we see that there's a lot of room for equity to grow, as well as we do find that over the last 40 years in a more volatile market like GTA, we're still seeing 5% over the last 40 years. So it is safe to say that 5% is a pretty good number. So overall, you have a 17% return on your money. So if you bought this house and it cost you $12,000 a year to keep, and yet you had the ability to earn 17%. So for 100,000, you now have 117,000. That might be a good investment to consider over, especially the cost of living being 7% increase, I believe, inflation per year. And usually with typical RESPs and things like that, let's say a RESP gives you, 20 grand over the next, 8 grand over the next 20 years. That increase is like 1%, 2%. So the government's giving you about 1 or 2%. With having a property, you're kind of recession proofing yourself. You might seem like you have debt. It's actually good debt. Another thing to remember is that you are able to have more leverage. So when the prices are down right now, a little bit down, you will be able to gain more equity, which means when more people come back in the market, you'll be in a better position. That will give you more leverage, which just means you have the opportunity to use that to either buy another property, and that's how wealth is built. So if you have questions, you'd like to go through an example, your situation, even book a call with our broker or have a discussion and look at that seminar. I'll leave the link down below. We also will leave a link to our investor guide, our ebook. So I'll make sure that there's a page for you guys to go check that out and grab that copy then. All right. Have an amazing day. Thanks.